And welcome to week number 37. Last week we saw some good reactions from what we were looking for. We were looking for Euro CAD to make some movements higher. Back down to about 100 to 150 pips. And I think last week saw some good traction higher, so we kind of achieved that. And also we're looking for gold to drop a little bit, and that kind of came through as well. Now, majority of the liquidity that was looking to push through and volatility to happen has probably settled already. So we are sort of halfway through September. The last 2 weeks of September tend to be trickier to trade. In my opinion, if you can, take some time off next week and the following week and try trading back in the last week of September. Things will be smoother. Right now, trading will be a little bit more difficult and a bit more iffy. So you have to have your timing right, or you will get washed out, in my opinion. So it's going to be a bit more difficult to trade, as long as you have that in your mindset and your trading plan. Possibly even lower your position size, and that should keep you right. Starting this week's analysis with the Scotiabank CFTC report, we saw some big moves in Europe. So we were looking for EURUSD obviously to pick up because of the 2-year yield correlation I've explained in week 34. If you don't know about it, have a look back. It's a great tool to know in the long term, because you're going to end up catching a lot of good trades on EURUSD. And I pointed out the past performances was pretty much 10 out of 10. And this time it worked as well. And we saw the positioning play out in the CFTC report as well. So some bullish positioning build up again in the euro. However, I should point out that all the heavy lifting in the euro came from the short positioning, squaring positions. The longs pretty much have done nothing but reducing since all the summer and all through now as well. That doesn't mean euro should be bullish, it just means positioning adjustment is still there, and the shorts kind of were driving this whole scenario. On the pound, it was a bit more directional, so you saw longs reducing, shorts adding, and they kind of drove it down to over 2 billion, even in a week, interestingly, where the BOE's Bailey said that half the people on the board, on the MPC board, thinking that the conditions for rate rise are ready. But pound didn't really climb that much, which is interesting, but something that we'll get into momentarily. Next week, the biggest mover I see happening, if any, is going to be from the 10-year yields, and that should also explain into movements into yen pairs. So if I were to overlay the 10-year yields, I've got them here with USDJPY, nothing new, major peaks and troughs all together. And right now, as it is expected, the 10-year yields can climb to about 1.4, hopefully by end of September, going into October. That should translate into USDJPY climbing back into the 110, 150 territory. And looking at a calendar, I'm looking at CPI report to drive the momentum next week to happen. So I'll try to see if I can squeeze a long out on that position. If CPI doesn't give me what I want, I still have the retail sales on Thursday to give me that positive traction I need on the yields and the USDJPY too. That should translate to all the other currencies, so yen pairs to move higher as well. One particularly I have in mind. Now, before I say this, I'm actually short GBPUSD. I'm waiting for an inefficiency in the market to fill from Thursday. But overall, if you look at yields, there could be some data surprises from the pound next week. So we've got unemployment, then we've got CPI. There's loads that could go right for GBPJPY. And if that happens, I really like this higher. I'll need like this 200, 300 pips, possibly higher, on the whole narrative that the UK economy is doing not bad. The lockdowns are getting phased out for good. And that could set things up for quite a strong move. If GBPJPY starts trading below let's call it 150, 120, I'm gonna start changing my mind again. Because overall, I don't think we're gonna see a big rally. But for now, as yields are moving higher, it's everything in its favor to move. If this is gonna create a bullish move, it's gonna be in the next following few weeks. And I believe on the 23rd we will have the Bank of England announcement. So to run up to that, I would like to see some sort of bullish reaction, as what head of Bank of Bailey said last week on Thursday. They're looking quite positive. They're quite hawkish on the economy. I like to see that translate into some moves higher here. But keep an eye on that. That's nothing I would get too aggressive just yet. I think if the move comes, you're still going to have time to get into it at the end of September or beginning October. But certainly that sort of a bullish environment is building up. So we have two things we're looking at. We're looking at USDJPY to move higher. We're looking at GBPJPY, possibly create something. CPI from Canada next week, we have that as well. Now, me personally, while Canada is in the middle of sort of like election meddling, I'm very bearish Canadian dollar, but the data is keep coming in strong, which makes a difficult case to sell Canadian dollar. Be it as it may, I kind of like this Friday price action as well. I really like Canadian dollar to lose ground a little bit. This is moving higher. However, the consensus is not really there yet. That's why I don't think the momentum will be there, and that's just going to be one of those you're going to watch. Don't really want to sell at these levels. If it's going to become a sell, I really want to start momentum picking up. I'm quite happy to sell a bit more expensively, but then I know I've got the momentum. As that's one of the things I want to keep an eye on. Another one I'm interested in is New Zealand, and I'm looking at Euro NZD. Now, originally I said Euro NZD still got room to move lower. It moved quite a lot, and I really like to see what it does during the GDP announcement. Remember, the case for RBNZ to hike rates is still there, and we like this lower. And I like to bring up the 2-year real differential chart again, that give you more confidence in seeing why this pair should be trading way lower. So that's the 2-year differential chart between bonds and the Kiwi bonds. If I were to overlay that with Euro NZD and past performances, you can kind of see. So this is the past performance, Euro NZD differentials. Again, pretty much mirror each other. The idea is that yield differentials kind of show the way if one central bank is more hawkish than the other. Now, beginning of June, this started cratering, but Euro NZD kept playing up. It didn't find its foot all summer until the end of August kind of came, and now it's starting to kind of fall down to where these yields are. If these yields can climb down a little bit lower following that rate, then yeah, there could be more room lower for Euro NZD, and that's a trade I'd be interested in taking to explore more downside Euro NZD. Another thing to consider when you're trading any of the commodity currencies is obviously you want to have risk in check, because commodity currencies are closely correlated the way that risk checks out in the market. Now, we got yields higher, but we had end of the week stocks lower, which is a little bit of a conundrum, so you're not sure which way it's going to all play out. But these are some of the key events I am looking at. As we come towards the end of the week, we're going to have some more data from the UK, which is retail sales, and another possibility to see some movements on GBPJPY. As a whole, that's sort of the trades I'm looking at. If you can stay away from markets, it won't be easy to trade next following weeks. But if you are determined to pick up some trades, I think you're going to see most movements on your yen pairs. I'm quite keen to see USDJPY move higher. I think that should be a cleaner move. Even though we're in this contested zone, I think it should climb up towards 110.50 again. That's the sort of trades I'm looking at the following week. There's loads of data to play with, so wait for these volatility pockets to show up. Don't just jump into trades, because you will get faked out, as there's lots of choppiness coming in the middle of September. That's all I wanted to talk about. I wish you a fantastic and profitable week, and I'll catch you all next time.